Hey there, podcast listeners. Exciting news. My new audiobook, The Short Book Formula, a financial professional's guide to writing a book in 6 weeks to attract ideal clients, is out now. And the best part, for a limited time, we're offering this audiobook to you for free. Hurry over to www.theshortbookformula.com and claim your copy now. And now, on to our show. Good to see you, Eric.
Thank you, Paul. How are you doing?
I'm doing fantastic. Congratulations on your new book. I'm holding it up here. I'm not sure if it's showing up or not. I just got my copy and I just love the look and feel of it. I believe this is your first book to be published.
Yes, it's my first book to be published.
Congratulations. Not only that, but you're now an Amazon best-selling author. That must feel good.
Yeah, I just wish Amazon gave like that fancy plaque like YouTube does, because they don't give us anything for that. That would have been nice. So if Jeff Bezos is listening, can I get a plaque?
So for anyone watching this, the question that they're going to have on their mind immediately before we dive into the book is, what is that wall behind you?
That's a great question. It's the sneaker wall. So I'm a sneakerhead. I played basketball for a long time in my life. Growing up, my parents refused to buy me those expensive sneakers. I guess I'm more than made up for it, but also I like to use this as a backdrop to remind people that there's a variety of different ways to lower your taxes, and not everything looks and feels the same, and that it's customized for what your particular situation is.
I like that. You're a CPA by trade?
I'm a CPA by trade. I'm actually a second generation CPA. My father, Les Pierre, was the first CPA in my family. He's now retired. With my mother, they'll be celebrating their 46th anniversary, December 30th. He was licensed out of New York. He worked corporate accounting most of his career out here in Houston. And I'm licensed in Texas. I'm also licensed in California. My firm is Pierre Accounting. We are in Houston, Austin, San Diego, and Los Angeles.
Very cool. I think the first question I have for you is that if I think of a CPA and I have a really good year, very rarely do they say, hey, we're going to work with you to reduce that tax bill above and beyond what you should pay. Instead, it's you've had a good year, congratulations, now pay your taxes. Which personally, I don't like that message. And just what really strikes me about your book, one, I love the title, which is The Great Tax Escape. I really love the subtitle, which is why making more money doesn't mean you have to pay more in taxes. And that's, to me, just such a novel idea that immediately my question is, I need to know more about this. We'll get into this through the course of this interview, but just from a high level, how are you the same or different from, I guess, what I would call a traditional CPA?
A little different for a few reasons. I don't look like most CPAs. I mentioned, I believe in the beginning of the book, 1% of CPA firm owners are Black or African American. I don't know what to call myself these days. I've always had to be different. I'm also 6'8". I just think life is too short to make money and then give it all to the government. But the thing is that the tax code itself has 40% more words than the King James Bible, which we consider the longest book, right? There are a lot of provisions that the government allows for you to mitigate your taxes. I know people at church, well, you have to pay to Caesar what is Caesar, but Caesar allows you to take certain tax breaks. And a lot of the tax breaks and provisions are there to generate economic activity, whether for charitable, employment, et cetera, et cetera. So a lot of people say they're secrets. In my book, I mentioned the secret playbook, and should have used that lighthearted. It's a secret playbook because you don't know it. But people like me and my Redeem team, we know it. And you don't have to be the wealth of Jeff Bezos, Elon Musk, Damon John. LeBron James is a billionaire. You don't have to be a billionaire to take advantage of these tax breaks. You just have to be willing to work with the people that know these things. These are legal. Most of these things are supported by tax opinion letters if it's not directly coded, and they're usually upheld by tax court precedent or cases.
I think a lot of business owners and entrepreneurs and just high income earners generally are frustrated. But why is your typical CPA not telling their clients about the secrets that you've uncovered through tens of thousands of pages of tax code that are all 100% legal and are designed to help high earners legally pay less taxes? Why is this not more commonly known information?
Paul, that's a great question. So there's a couple answers. One, most CPAs They're really good. We really like to help people, but we get overwhelmed with the compliance work. And this time, we just had our tax filing deadline a week ago
Yep.
today at the day of recording. So tax season now is 9, 10 months long, and most CPAs are focused on compliance work, and they're not well resourced to delegate the work and then free up time to go work on your business instead of working in your business, right? So
Yep.
that's one thing. And then also in the book, we reference whether it's tax professionals, and excuse me, I don't want to get too much in a foray. There seems to be propensity where CPAs tend to have political views that if you're rich, you should pay more than your fair share, even though we mentioned in the book the top 50% earners pay 97% of taxes in this country. So they are actually paying their fair share. I think there is some animosity because most CPA firms are not big like Deloitte. Most CPAs, they're either working for small firms that own boutique shops and firms that are not a boutique. And I think most of them make on gross revenue $200,000 a year or a little less. So
And that's revenue, not income.
gross revenue, not necessarily profit. Right.
Yep.
Now, the profit might be close because a lot of those firms, the owners usually doing the work themselves.
Okay. That's an interesting point that I haven't heard before, which I find fascinating is that if I heard you correctly, and I know that you talked about in your book, if you can expand upon it, is that it can come down to politics in the sense that your traditional maybe Republican will say is more for lower taxes and your traditional Democrat is more for higher taxes. And so what I hear you saying is that your CPA might just be of the mindset that, hey, you've earned a lot of money. Now you should quote unquote pay your fair share.
Most CPAs, and I hate saying this because I still struggle with this, like most of us, we're known for not being good business people. You can have the mindset of paying less taxes and not necessarily be right leaning, because one thing, Paul, I will tell you, I know people who will post, oh my gosh, pay your fair share tax, but then they're contacting my colleagues like, hey man, I made 300,000-400,000. I don't want to pay 40%. In the book, we showed some of the names that are recognizable people in my industry, and they're decrying the rich when the reality is, like, I read this the other day. 80% of the millionaires in America are first-time millionaires, meaning that they didn't inherit it from their family and they took risk to get there. Like I could tell for me, when I started my practice, I didn't have a traditional path where I was in a firm and I took these clients or I had money. I was able to leverage my bank account to buy a practice and buy my job. I looked like Drake, started from the bottom, and now I'm here. And I burned through a 401k of 150,000, almost didn't make it. That's usually what most entrepreneurs do. And the tax code, quite frankly, rewards entrepreneurs. Why? They want entrepreneurs to be successful so that then they can hire more people and then tax the workers. Like it sounds crass, but that's what it is. And by the way, for my colleagues that brag about Democratic people that are left leaning, some of the biggest users of well-known tax breaks like Jack Ma do things like conservation easements. He's left leaning and he's used real estate tax strategies with Amazon to expand all these warehouses and then not pay taxes for many years using accelerated depreciation, by the way. And he's very left leaning.
So expand upon that a little bit, because that's an interesting tie-in. So, for example, you had said earlier that these are legal because the Congress wrote these laws, incentives to create certain behaviors. And in the examples that you just brought up with, say, Jeff Bezos, he's taken advantage of incentives, but they also align with, say, his political leanings.
Yes. And then Amazon is known for hiring. They've created a lot of high-paying jobs. When I go to my barber out in far west Houston, I drive by a massive Amazon warehouse that was never there because I grew up in Katy, and there's a big Amazon warehouse in Katy, and their drivers making 150, 200,000 a year, delivering things that we use every day. And by the way, one example, one that's very controversial, conservation easement. But if you understand conservation easement, a lot of the public parks we go to, golf courses, beaches, a lot of them are actually through conservation easements where that land is set aside for the public use. There's a lack of education about these things, which then causes a resentment. And before I go on, I think part of the issue is that I think people need to separate what people do with their money doesn't necessarily make them immoral versus maybe you should look at yourself and glean off what they're doing, and then you can get some of that money and then you can make the impact in your neighborhood. And Jeff Bezos, he's out there in his public life, but he did donate millions of dollars to build a museum in honor of the late John Lewis, one of the civil rights congressmen.
So my takeaway from what you're saying is that whether you're left leaning or right leaning or anywhere in between, there's tax incentives that will align with your values. And so the through line is that you can keep more of your hard-earned dollars through tax incentives that will likely align with your values.
Absolutely.
So, who is your ideal reader? And by extension, who is your ideal client? Who are the people that you work with day to day to help them keep more of their hard earned money?
I would say people, clientele that make 500,000 or more, and that can include W-2.
Okay.
That's the level where me and my Redeem team, where we work best. To take advantage of those tax breaks often involves some sort of financial investment. And we found that usually at that income level, they have some of the disposable income available. Make those investments to invest in the strategies that provide the multiple to either significantly lower their tax by 56, 7%, or some years you can make it zero.
So $500,000 is typically the entry level to really
Yes.
fully take advantage of these tax strategies. And I think that kind of goes back to my earlier question, which is why probably a lot of people are just unaware of these things, is that that's a fairly small percentage of the population that earns that much money.
Yes. You're probably talking about maybe 3% of population.
Yeah.
Gemini says 2% of population millionaires and up when you exclude the personal residences, probably about 3 or 4.
Yeah. And I heard you say a couple other things that I want to dig in a little bit deeper. W-2s versus business owners. I don't know if it's misconceptions or what, but a lot of times W-2s, rightly or wrongly, that there's not tax strategies for them. Can you share a little bit more about that?
Yeah, that's incorrect. So W-2s, there are tax strategies. Often there are limitations on some of the strategies. However, if you make over 500,000, for instance, I work with a client of mine who was W-2 for a really large tech company, and he made over $1 million in income. His total tax bill between federal and California working with us was about 200.
It's about 20% total.
20% total when he was in the 50%
Yeah.
cut line. In fact, he overpaid by a total of around 300,000. He's starting his own thing. He'll get some money back to be able to invest into his startup business, actually. You just have to work with the right people that have studied the code and also are proven. So for me, I do keep a list of references. You actually can read two of my references at the beginning of the book. One of my clients is a developer. One of them is somebody that's very famous that does get substantial W-2. That individual is on TV every Sunday.
For the purpose of book sales, I have the book here, but I am not going to read the names. You have to get the book to know who we're talking about. I also heard you mention a word, the Redeem Team. What is the Redeem Team?
So the Redeem Team, that's just my pet name for the team of specialists that help me serve my high net worth clients on these tax strategies. There's a group of us. Some are CPAs, some are financial advisors. Some of them have different licenses because there are far more tax strategies than there are sneakers behind me. And I have over 200 total, by the way. And so we get together, we vet these strategies out. They're highly scrutinized. And so then, depending on the client, if you're one of those high net worth people, I do initial call to get an understanding of your income and then what do you want? Right? Some people are very charitable minded. Some people are like, look, I just want to save a bunch of cash so I can buy a car or buy a house or invest in this. And so I'm basically your bespoke tailor when it comes to the tax code. And if you go to a tailor shop, in the back, they have several people working with them to do the hemming and the sewing. And so that's who I call the Redeem Team because these people I consider my peers.
So I know we've talked about a number of things. Are there any common misconceptions or tax myths that we haven't discussed so far that you think our audience should know about?
Yes. One of them that I'll gladly discuss. If I do an advanced tax strategy, I'm going to be audited. The answer is not necessarily. I discussed in the book, the IRS has admitted they audit on average of maybe one of every 500 returns. So again, with these advanced tax strategies, depending on what they are, so, for instance, I mentioned conservation easements earlier because this one's been publicly talked about. That one's actually written in the code. And so if you were to invest something like that, there's a multiple that they have to follow. If you are part of a syndicate, the partnership entity has to file a return and you have to give the appraisal with it. Now, someone like Ted Turner, he bought a bunch of land in Montana and used that to lower his income when he owned Turner Networks.
A couple points of clarification. A very basic one. When you say advanced tax planning, what is that or how is that different from just what people do year to year? How would you describe advanced tax planning?
Advanced tax planning, part of it is you get together with your tax professional or strategist, I'd say September, or if you're about to do a transaction, and then you may implement like accelerated depreciation. For some
Okay.
people, they bought a $2 million building. Depending on the bonus depreciation, they might be able to get a million of it. And I've seen it, it's legal.
Mhm.
$1 million write-off. Let's say they have $800,000 of ordinary income.
Mhm.
They're a qualified real estate professional. That $1 million depreciation expense puts their income down to zero.
So, from what I'm hearing you saying, it's strategies that are typically not your cookie cutter.
The ones on Instagram, hire your family, which you should do if you
Sure.
can. People talk about the Augusta rule. That's cookie cutter because it's spelled out in there. It's a good one, by the way. But these
Mhm.
are things that you hear over and over again, right?
Yep.
Hire your family, max out your Roth. On that, and I'm not knocking these strategies
Yep.
because I have a SEP I've used to. Now, what's advanced is that I have a SEP that I used to invest in a business investment. I need to convert to Roth before they put distributions because then I can grow tax free and
Hmm.
circumvent the Roth limitation for income.
So, just in terms of the people that your typical high earner works with, I'm going to make an assumption here is that they might have a CPA, they might have a financial advisor. Where do you fit into that? Do you complement that, or do you essentially replace that in terms of the work that you do?
It depends. I have a client that I work with. They have a CPA, but their CPA doesn't do advanced stuff. So I just do strategies for that client. For other high net worth clients, I've replaced their CPA.
Yeah.
Now, I'm not a licensed RIA, so I don't know. I can tell them the tax implication of
Hmm.
investment, but I can't really tell them if it's a good investment or not.
In the book, you talk about empowering financial freedom. And how would you expand upon that? Just from your general viewpoint, how do you help them with their financial freedom more broadly?
It's going to depend on their objective, right? Some of my clients like to give a lot to charity. And in the book, I think we gave an example of somebody that gave a lot of money in their community forwarding educational things. I had a big year last year because I saved on taxes. I was able to provide an HBCU in Austin a nice, generous 5-figure investment, able to provide 6-figure donation for inner city causes in Chicago where I used to live. What makes me unique is that I also live these things out. I've been fortunate by the grace of God that my business grew to the point that I had to use these things.
So you mentioned some charities, and just philosophically, or even just more broadly speaking, when you get into that really high income space, do you find that people are naturally charitably inclined, or does it go hand in hand with some of the tax strategies?
That's a great question. I think it goes along hand in hand. Some people with the strategy ends up being more because they weren't aware that, oh, I can make this investment, benefit this cause, and lower my tax. Because normally, like for instance, we worked with a group where there was a technology for skin burn, and people didn't know for every $1 you put in, you're getting a 5-to-1 benefit.
Hmm.
And then that product actually got FDA approved this past year. A lot of people are charitable inclined, but they don't necessarily know that their money could be put because typically you think, okay, I got to check United Way, and then you never see it again. I don't get much benefit. Some people may not be trusting their churches, but if you show them legitimate causes that benefit them, or even something simple, and if you have a big year, you can set up a donor advised fund, load up your schedule A deduction, and then spread over 5 years. Some people don't realize that they can actually load it up and control it and spread it out.
Hmm.
It's just a lack of education because I tend to believe in humanity that most people are kind and want to help. They just don't always know how.
You had mentioned earlier about, I think, one of the greatest fears for any high income earner, it's I want to keep more of my money. I want to not run afoul of the IRS. In addition to what we've already talked about, are there any other misconceptions or things that you can share with us that allay any concerns about IRS audits? What should people know about that?
If the IRS sends a notice about your tax return, it doesn't necessarily mean they're going to audit you off the bat. Sometimes they need more information. Sometimes these advanced softwares, there's these forms that don't get attached. Just because they audit you doesn't mean that you're going to give money back. I was audited by the IRS 2017.
Hmm.
The reason that they triggered, because at the time I didn't have an office, I was driving all over San Diego. So they said, sir, as an accountant, your mileage was awfully high. You reported 25,000 miles. Yes, I don't have an office. I went to the IRS agent. I used an app called Everlance, and I gave them a log this big
Uh-huh.
over. They looked at it and said, sir, we actually owe you money, but we're not going to give it to you. I was like, what? And that lady was so upset. She thought she had me.
So in your own case, that happened, and was it as bad as people fear? Or was it just
No, you just have to keep good documentation. One of my high net worth clients actually got a letter about a strategy. We sent the doc, they adjusted it and somehow he got an extra $100,000.
Okay.
Got a refund.
I know that there's a difference between you in your role and, say, an investment advisor in their role. How do those things come together from your perspective when it comes to retirement planning?
On the retirement plan, we can help show the impact, the tax savings, because you can have your own, when you have a business, you can have your own defined benefit plan. You can have a solo 401k. We can show you the numbers, the delta. Now, how it grows, you work with the advisor and how you hold the asset, but we can also educate you on having self-directed retirement plans. I used to work with the real estate developer. I learned about the self-directed IRA when the client had a construction company and a lot of wealthy people were using their IRAs to invest into that company. My real estate developer clients that make a lot of money, they have massive depreciation. We might be able to convert some of their regular IRA to a Roth, but the income with the tax comes with it might be wiped out by some of our strategies. So that's the difference of working as strategist, because regular CPA members say, no, you can't do that. And I'm like, there's another way.
100%. Anything else about retirement that we haven't touched upon?
If you're going to do a Roth conversion, I suggest you might do it next year before the government starts making it harder to do.
Tell me more about that. Is that the Trump tax cuts, or is that?
Yeah, part of it's that, and there's also talk, depending on who's in office, that might be taken away. I wouldn't waste time on that. Because in fact, you want to make sure you get your retirement planning airtight, particularly wealthy, because I do believe in our lifetime that you are going to see wealth tax. So you may want to get your affairs in order.
Meaning?
Tax on your total wealth. You make various proposals about carried interest tax, increased capital gains, these with the Trump tax law sunsetting, estate tax thresholds drop down. Where we do business, California, if a single person is $6 million, that might be their home. It's not a lot of money in California or New York or now South Florida. The price of the
Next couple more questions while I have you. Leaving a legacy. I know we talked a little about charities, and is there anything else that you would share with us about your book or your message about leaving a legacy behind?
You can also leave a legacy behind, like with a trust, right? I have my own trust, and there's 30 or 40 different types of trusts. So you want to get with an estate planning attorney. But before you do that, you want to know who you're going to leave stuff behind for. So I'm single. I've never been married. So right now, my family members and also have charitable organizations that would inherit my assets, because you don't know when you're going to die. You should always have that. And also another way that you can for legacy is look into various life insurance policies. There are policies out there that aren't very expensive, and you can even have them set up with irrevocable trust to make the proceeds tax-free to beneficiaries. So everybody should look at that. Everybody can afford life insurance. It's heartbreaking to see how many people don't have the state set up, but there's a lack of financial education.
Now, I have a very important question for you. If something were to happen to you, who is inheriting that wall of sneakers behind you?
According to my will, it'd probably be my sister. Victoria, you might want to go ahead and sell it.
Final question. For someone who wants to get a copy of your book or to follow up with you, what are the best places for them to either find your book or to reach out?
To find my book, you could go on Amazon and type Great Tax Escape, Eric Pierre. We have a website dedicated for this book, greattaxescape.com. You can follow the prompt. There's instructions how to get a hold of me that way. Or if you want, you can also go through my firm's page, pierreaccounting.com.
Perfect. Any final thoughts or takeaways before we wrap up today's interview?
I would say if you're making a lot of money, you don't have to be stressed. You can bask in the sunset, knowing that if you work with me or someone like me, we can get you to pay a lot less than 50% total taxes.
Just going back to the subtitle, why making more money doesn't mean you have to pay more in taxes, is a truly compelling message that every high earner needs to know about. Eric, thank you so much for your time today. I enjoyed the conversation.
Thank you for having me, Paul.